Welcome, everybody. I have a very special podcast for you today. I have an idol of mine, actually. Patrick Assalone is in the house today. And many of you have heard in the Discord room that I formed a relationship with a company by the name of Target Trading. Well, Patrick is the head trader over there. And him and I are going to be working together to lead the way to conquer the markets with you guys. So I wanted to do a podcast with Patrick today because he trades a lot of different products and he has a lot of knowledge on other things. And he actually has a different way of trading and he is very successful. And so, Patrick, actually, when I was coming into the institutional side, Patrick was actually already at the top and I was aspiring to be like Patrick. And he used to look down at me and actually he wouldn't even talk to me, just to be honest about it. And so it's funny how we ended up here, but that's cool. So Patrick, obviously you have the floor, my friend. And, just to kind of kick this off, this is unscripted. We've been on this call maybe 5 minutes, and I said, let's just start this the way it is. So please just dive in, bro. Tell us what's up.
Here's the funny part. And I think what Ryan had possibly seen was he was not coming in as a salesperson with the former company that we were with, but I think he was literally standing next to a couple of these guys who introduced themselves to me. And I said, don't bother. You're not going to be around here long enough for me to remember your name. And I was like, it's not personal. It's just that side that you're on is a nightmare to work on. And God bless all of you. Please.
It was a revolving door.
Yeah. That was a tough business, selling business, which is shocking because even the products back then were so successful that it was crazy just keeping people.
Yeah.
And I remember what had happened one time where some of these guys, we had like the greatest month that they had ever had. And this is 20 years ago. Or 15, 18, 17 years ago.
Yeah.
They were putting up $700,000 to $800,000 a month in sales. And I know people say, oh, that's nothing. My business makes so much. I know your business makes so much more than that. But when you're getting 20-year-old kids who are making 15 grand every couple of weeks,
right,
and they're broke by Monday after they get paid on Friday, that's why you could understand why it was a revolving door.
Hey, Chicago was a hell of a drug.
Oh my God. Oh my goodness gracious. If anybody ever traded there or came in to visit anybody that traded there and you went to Siri's restaurant, which was open at 6:00 in the morning, already serving alcohol.
True.
This is the kind of place that had the greatest breakfast burrito you've ever eaten in your life and bar service where they put an 8-ounce rocker glass and a can of Coke and just filled it up to the rim of whatever you were drinking. Like, yeah, you govern yourself, man.
Bro, that's the place where degens were made. Like they were made there. I remember going into the trading floor and seeing guys that I was working with at the bar already. It's like 7 a.m. They're sitting there doing their thing. And then actually that place is what got me smoking cigars. There's that awesome little cigar shop that's right next door. That whole place was bad. That was like it was really bad. It
was great and bad all at the same time, right? Here's the funny part. This is what a lot of people don't understand. They think that the average trader is this Ivy League freaking MBA genius. No, those are the failures. Those are the guys who lost out, blew everything they had because they thought they were smarter than everybody else. And it was the kid who was a freaking delinquent who couldn't get a job anywhere. And his uncle Vinny gave him a job running for him to begin, where they taught him 2 trades: go long here, go short there. Like what was that movie, Boiler Room, where they live in these mansions that were completely unfurnished?
Yeah.
Because they didn't know, they were kids. They didn't know anything.
Yeah.
And half of those guys were just going to work. They had busted out months or years earlier. They were just going away to get away from their wives.
It's true. Yeah. It was unbelievable. Actually, I've never seen a place, the floor, where guys would come in with 25 grand and literally like they could start an entire career off of 25 G's, some of these guys, because they rode the crowd. You know what I mean? And it was just a different time back then. And you and I, when we met, so the Board of Trade was next door to the building we were in. By the time I had made it there, we were in the building next door. And it was just absolutely insanity at that point. I mean, it was booming and bustling beyond words. And so, you were a big shot. I remember looking, I'm like, I'm gonna work with this guy. We're gonna get there. So it's good stuff.
Now, I used to be a superstar. Now I'm merely a legend.
A mere legend.
I'm merely a legend now.
That's what's up. So when we started this, I stopped you immediately. I was like, don't even go any further. So, I just shot the week in review. I'm late because I was putting you on hold while I finished that. And I was like, man, it's kind of, it was wild that the market gapped down 100 points. And you're like, why? I'm like, well, it really wasn't. I just didn't want to miss it. And then you made a comment about the Iranians and the whole thing. Please kick that off because I stopped you and I want to hear what you had to say.
Well, first and foremost, let's be completely honest. You were mostly late because you were taking care of your dad and helping out your mom because they needed some help. And then you ran your ass home and realized that all this stuff is in boxes and I got to put it all together before I start going to work. Okay, so let's be completely honest because I would call you out if you were out drinking and that's why we were late. Okay.
Okay. Yeah.
So we were looking at these things and, we both have a ginormous market profile background. We both do things a little bit differently. The way that I learned was the guy who taught me was he put a trading card in my hand. He said, okay, those are the 5 biggest guys in the pit. Whenever they hit 100 cars, write it down. And if the market's going up and your drawing is going up, that means those are the guys that are moving the market. They're driving it up. You want to buy.
I'm going to stop. You're the only other guy I know that says cars. That's how I know you're old school, bro.
And I'm old.
Sorry, I didn't mean to cut you off. Go ahead. So you're following the big boys.
You're following them, and you're like, and simultaneously, conversely, if they're buying hundreds and hundreds of cars and the market's going down, they're closing out shorts that they had placed earlier that day, that week.
Right.
Okay. So when you get your cards and you start putting them next to each other on the floor, you start seeing patterns developing and you understand how to read it. Well, then what happened? The advent of electronic trading and market profile graphics and all, it was like shooting fish in a barrel now because all of that stuff is done for you now. Far be it from me. Do we win every single freaking trade? No, we don't. Year to date, we're up 76.46%.
That's awesome.
Now, this is not me taking these trades, Ryan. This is me teaching to clients. I'm posting the levels the day before. They're trading off of those levels, and every single thing counts.
And what kind of market? Like all of them? Like, so I only trade ES. You know that. So you're you're all over the place, right?
I'm ES. I am NASDAQ. I am gold. I am oil. I am British pound. I'm the Dow and the micros. I don't care.
Okay.
None of it matters to me. And here's the shocking freaking part. The micros have better action than the minis.
Well, you were saying that earlier. You basically said something about oil and gold. Now that the prices are just insane, that all the volume or what you noticed the action was in the micros.
Gold was my go-to freaking. I didn't care what up to about 4 weeks ago. If gold opened gap up, I'm shorting it. Opening bar gap fill. I'm not even thinking twice about it. If it opened gap down, I'm buying opening bar gap fill no matter what. I've got one of my clients who's more of a freaking demon than I am on it because, I'm actually advising people doing things when things are going on. So they're trading more than I can. And the truth of the matter is I can't front run them. So I've got to make sure that they're in a position and then I could market order something and get in seconds afterward or whatever it is. Okay. So he was 9 out of 11 with 9 winners, 1 loss, 1 break even, trading 4 contracts on micros. He was up over $2,000 live real money on 9 trades trading micros.
That's insane.
So when people say, oh, well, I'm a minis trader, or I'm a 5, you really need to step up or step down off that pedestal you're on and take advantage of where the participation and liquidity is. Because let's say instead of trying to trade 1 contract in the NASDAQ or 1 in gold, where you're going to get slipped, where it's freaking thin, there's no liquidity to get filled, you could trade 7 in either one of those instruments and have something to run instead of having to trade 1 contract.
I wanted to pull up oil right now just to see. You said it was gapped up 18%. Jeez Louise, this thing it was up so many times, up 10% last week. My good Lord.
And what we were saying about gold, Ryan, is that couple of weeks ago, I've got dozens of clients who are trading live money, their own accounts, many of them more than that trading prop accounts. And they all got notices from their prop accounts saying, oh, we're not trading metals anymore.
Yeah.
Which cut the freaking legs out of gold. Okay. And then what happened? They jacked up the margin requirement from like what, $400 or $500 if you're with a good futures firm to $1,600 for micros intraday. So they're freezing everybody out, so they can't trade anymore for whatever reason. But all of that participation has now rolled over into micro oil and micro ES. Micro oil is trading hundreds of thousands of contracts a day. Started doing that last week when a good day before last week had been 50,000, 40,000 contracts traded by the end of the day, including the overnight.
Right. Yeah, this thing is going hard right now. I saw, so, I'm sure you use Thinkorswim or you've used it in the past. I still use it to chart. It's OG, right? But they have the highest margins in the industry. They had $75,000 margin on the silver contract. I don't know if you knew that. I know, 75,000. I was like, that's more than. I mean, Bitcoin. It's crazy to me. It's absolutely unbelievable. Here's gold too.
I think AMP futures, and you know as well as I do. Don't go to these big, huge shops like Thinkorswim because your margins are going to be just jacked up through the roof. But when you get to future specific firms, let's say one was AMP, and I have nothing to do with them. I do not have an account there. I've got nothing to do with those guys. Okay. Their intraday margin on silver was 48 G's from a future shop.
Wow. But I knew guys that were trading it on prop, and they were either instantly blowing out with micros or they were making a ton. It was just so insanely volatile. And of course, silver's big boy. I mean, at $50 a tick and the rate it was moving, it was absolutely insane.
Well, it is, but also there was something else that if you really read between the lines and what had come out with that email from all these prop shops.
Yeah.
If you go down to chat or column or paragraph 97, they were really clamping down on influencers and affiliates.
Yeah.
Because let me tell you what was going on.
They were churning accounts. They
were churning accounts, but a lot of these cats were going in. They were already placing positions. Then they were telling their room they were going into something. They were front running it. And a lot of these guys have 1,000 people in their room for free.
Yeah.
And what was ending up happening is, well, my guy made this much money. I took the same trade. How come I didn't get filled? Uh-oh.
Yeah.
There's a problem.
Yeah. Some of these YouTubers, they have a lot of people watching them, and it's crazy, actually.
And which is fantastic.
Yeah.
But what I had seen when I had watched some of these guys was their risk management is just let the account blow up. I've got so many evals in reserve. I'm just use another.
That's for real, actually. A lot of guys do that. They literally stack funded accounts, and they're like, okay, it's a one trade banger. They either hit it or they don't, and they just go to the next one if it blows out. I've seen that 1,000 times too.
And I'll give you an example. One of our clients, she's a freaking assassin. She started trading with me a year and a quarter ago. She's been live for over 9 months. She will take 3 to 4 trades a day. She will be up in the micros anywhere from $300 to $700 the days that she trades, because she's got just ridiculous discipline and control. Okay,
dude, women make great traders.
They're my best traders by far.
Yeah,
head and shoulders by far. So she's the one who actually had sent me the notice from several, because she's got several prop accounts. So she would say, oh, what do you think of this? I said, what does it matter? You're well within their parameters. You're trading by the rules that I taught you. This isn't going to affect you. So what do you care? So when's the last time you've blown out an account? She said, never. So what do you care?
That's wild.
This isn't for you. And don't let it affect you now, because you've got patience, discipline, and a method that you know that works. So what do you care?
Well, you and I have never, we've talked briefly, right? Like it's about the strategy. And I know that, you use volume profile, market profile, whatever. anybody who's watching this knows what I do, and I like market profile as well. Can you just give us a 30,000 foot of what kind of how you do your thing? Yeah.
Sure. So what I have figured out in market profile was I was the only guy who understood what a contract start date was. I know how crazy this is. Because, and to give you a little bit of background on myself, you know this, but for everybody who's listening, I started out in this business by a guy who just hired me. I was a professional fighter for 14 years. I used to train him how to fight, and he offered me a job that I absolutely could not refuse. Okay. So the guy taught me, this is the guy market profile by hand. Okay. All this kind of stuff. And all I used to keep on hearing from people was, well, the last time, this is the highest price since 1987. Who the hell's trading it since 1980? Nobody was talking. And then I started getting into futures because I was at Wachovia Securities. We were selling collateralized debt paper, things of that nature. And eventually the guy that I was working for wanted to turn the entire book of business into a futures and commodities trading business completely. He just wanted to get away from the ridiculousness of stocks and dealing with FINRA and all these freaking people who were just out of their minds. So what I would notice is, okay, the S&P 500 has a new contract every 3 months. Why are you talking about 1987? Because futures and options it expires. Nothing before it matters because nobody's holding anything there.
That's a good point.
Which made me realize what an absolute fraud the securities business was.
Elaborate.
And so what had happened? I started tracking market profile from start dates. And what I would do was I would start identifying, let's say in a rollover week, when the participation would flip from the current to more in the new front month contract, which in a couple of days would become the current contract.
Yeah, right.
Well, that's when you start marking off your volume and your support and your resistance levels.
Okay.
And let's say for oil, it's going to happen every month. Well, those levels are only good for a month. But they're good until the contract expires and you roll over. So, for example, we gapped up to $107. I'll just pop this up real quick.
Yeah.
The previous contract high that I had drawn out on Friday was $92.60. The high volume area below it is 91.75 to 90.24. The HVA's high volume areas below those are going to be good until that market comes back down. And if we expire, then they're no good. We start drawing all over again because you've got to use contracts traded at that price over time. That's where the real support and resistance is. I can tell you something right now. In the overnight, you've got resistance at $111.17, support at $105.40. You've got below that resistance at $104.54, and then support at $100.98. You heard it here first. Okay. So,
you heard it here first.
But when I figured all these things out, I couldn't understand why people, especially on television, are talking about futures that are 6-7 years old or prices that are years old. They don't matter. Nobody's holding it there anymore. Right. The most relevant, valuable price is yesterday because that's the last time people were holding. On the weekend, Friday, you know as well as I do, anybody who is a day trader is generally closing out their positions because they don't want to be held captive to something like this in case they were short, whatever. Okay. So what happens? Generally Mondays, we're not doing anything. Unless I get range extension after the first 60-minute period, then I'm generally going in the direction of that range extension. Okay. I also don't want to take something unless the range extension is above or below Friday's high or below Friday's low. So which means I'm not looking long until I get above the previous day's high. I'm not looking short until I get below the previous day's low. Now, with that being said, Tuesday through Friday morning, I am looking for gap fills all day, every day, because I am absolutely 100% convinced of people's fear and greed because I saw it on a trading floor forever and a day. Because let me tell you what happens. We're going to go back to the people who we were talking about that you thought were these genius MBAs and smart finance guys and the most smartest guys on the planet. Okay. They're all freaking cokeheads. They've all got alimony payments. They've all got a bookie. They got something, okay? And you're laughing because you know it. You were there.
Yeah.
And it doesn't necessarily matter what the
bathroom was wild on the floor.
The bathroom's incredible. And it doesn't necessarily matter what's going on my 200-day moving averages. The overwhelming majority of technical analysis is freaking garbage. Let me tell you what it is. Where was I holding yesterday? Where did we open today? Because the fund and the people that I work for make me hold positions overnight, Tuesday through Friday. So I've either got to get back to that position or I got to take my money and walk away. And that's it.
Well, I mean, one of the most, for me, the most like, because, you know, I like market profile. For me, the most valuable profile in the whole thing is yesterday's.
Absolutely.
You know, I'm always looking at what happened yesterday. Where's the point of control? Where's my value areas? Like, is there any inefficiencies in that day? Because that is really the most important day in the whole thing. I mean, yeah, the other ones will play at times, but yesterday is always the juice.
Well, the only time that the other days, previous days, are in it or are in play is when you get above or below the previous day's range and it's being rejected as expensive or cheap.
Yeah.
And generally, those levels hold phenomenally. And the reason being is there are still long-term players who are either long or short only and are hedging portfolios for larger companies. So they've got to stay engaged. They have no choice. They can't do anything otherwise. So they're protecting positions when you hit these things. You know, so they're always in play. You just have to know where they are. And honestly, just freaking wait till it gets there.
I mean, I've never watched what you're doing in your room, but you send me your end-of-day videos that I'm going to start putting in my room. Your students are killing it. And as far as I'm aware, I mean, it's all based off of these drawings of yours, right?
That's all it is. There's no technical analysis involved. It's a modified market profile system because I was fortunate enough to be around a guy who did nothing. He was a huge hedge fund guy. And at this time, he had quit 20 some odd years ago with a $50 million bankroll. Now everybody's going to say, oh, what's that? Well, first of all,
that's my number. I'm out of here at that one. I'm good. See you guys.
You know something, Ryan, I got a price and I'm a lot cheaper than that. But this is a guy who then just took all of that freaking hardware that he had and started destroying trading methods, ripping them to pieces, methodologies, destroying them, pretty much disproved 90% of what Stedelmeyer wrote as far as market profile was. And the only reason why is because it was antiquated because of the advent of electronic graphics. And you don't have to look at the freaking liquid database anymore. It's all there. It's in front of you as it happens. So there's certain things that mean a little bit more to me. There's certain things that mean a little bit less to me.
Right.
For example, last week you were talking about we were 77 wins, 18 losses, and 10 break-evens.
Yeah, it's insane.
Well, you can't win if you're not in it. And you're going to take some losses sometimes. And if you're not going to do that, you should not be in this business. But here's the upside. We know what we're risking before we get in, and we've got rules.
Yeah, I'm the same way because, I mean, you can't take a trade. I mean, the first thing I look at is what is my loss, right? I mean, it's not about how much money you can make. It's about how much you're going to lose. I mean, that's really critical, everything. And then does it fit your risk to reward? I know that you and I were talking on text the other day, and you're like, I had 2 or 3 gap plays coming to play, and like I couldn't take any of them because the risk to reward profile was all off. I'm like, sometimes it'd be like that. You know, it's like there'll be another day. You know what I mean? It's like not a big deal.
Friday, on the LOD that I trade, letter of direction trading, for those of you guys that don't know it.
They don't know. They might as well explain it. Go ahead.
What it is it's sort of like a block account, which means I am taking the trades for everybody. Everybody's allotted to X amount. Right. So in this account, it's for gap fills only. Okay. We're playing gap fills only. So let's say you got 3 micros in gold, 3 micros in the MES, 3 micros in the micro NASDAQ. Okay. If the trade fits my parameters, I'm taking that trade right off the gap fill. If it doesn't, I have other entries trending toward the previous day's gap fill that I can trade. So what happened? Markets open, ginormous freaking gap down on Friday. I'm licking my chops.
Yeah.
Well, both of the micro NASDAQ and the micro ES face first against a brick of an HVA resistance right above them. So what do my rules say? I can't take that trade because you're going into resistance.
Right. Makes sense.
It doesn't matter when that HVA was drawn, as long as you are within that contract that's valid. Any high volume area above you is resistance. Anyone below you is support. You have to respect it that way. So I couldn't take it.
I'm with that.
6 freaking trending entries later, I'm disqualified on all of them. The gap fills like 100 and something freaking points.
In Q?
In both. In micro ES and let's see. The micro ES actually filled to its low, and then the micro NASDAQ filled right about lower middle range.
So I know we each have our own little thing. Yeah. I actually took the long on ES after we swept that daily low. I think I sent it to you. We swept the low, but not to plug them, but I'm going to say it anyway. Edgeful is, I don't know that you just signed up for that. The data is great. Like it had 100% probability of filling that prior day's low. I mean, once the trade set up, I had to try. I mean, 100% is ridiculous. Like I never see stuff like that. So 100%. I gotta hold it. Right?
This is something that I think a lot of people don't really understand about gap fills. Futures is a zero-sum game. There's only one more aggressive buyer versus passive seller and vice versa.
Right.
So there's just as many people holding on the other side of that close as there is whether it's higher or lower. Okay?
Somebody's losing their lunch money.
Somebody's losing. So let's just use Friday as an example. So the Thursday's close was 68.24. We'll just use round numbers. We're not going to get into ticks. 68.24. We opened at 67.52. 70 freaking points.
Yeah.
Okay? Let me explain to everybody in layman's terms, because I am a layman on how this works. Everyone who was holding long or everybody who was holding short on Thursday woke up with a freaking Christmas present in March.
Oh, for sure.
And what do professional traders do? Let's say if somebody's holding 500 contracts short Thursday and it opens Friday 70 points down, he's going to get rid of 350, 400 immediately.
Immediately? Why would you not?
And what's he going to do? He's going to see if there's freaking people losing their minds or if a bunch of retail people jump in and go, oh my God, the market got shut. And maybe he'll squeeze a few more points out of it. Okay? Yeah. Well, what are all the people that were holding long doing? They're losing their freaking minds. You want to know what they're both doing? They're both hitting buy orders.
Yeah.
Because the people that are short have to hit buy orders to close out their position, and people who were long have to double down to try to get right back up again. And also what people don't seem to understand about this, you don't have to get back to the close. You can start throwing on hundreds and hundreds and hundreds of contracts, and you can actually balance out your position on the way up. And then you want to know what happens? They all freaking cash out and they leave because, dude, you were just driving this thing right back freaking up. What are you doing?
We're going to the same thing's going to happen again when we come into the market on tomorrow. Here we are. I mean, this is our gap down right now. It's down 103 points. For me, it's playing some weekly support. It's tested, whatever. But, I shared a statistic with you that again, this is like so interesting. And I found this out from somebody else. I mean, I'll admit some of the best things I find out come from other really smart people. And one of the things that I showed you, I said, hey, check this out before we come into it, was the fact that when VIX closes up over 20%, especially on a Friday, the probability of it going up in the next, I didn't read it. It's been a while. It was 24 to 48 hours. It was 89%, something like that. So, again, people are, losing their shit. There's a very good possibility that we rally like a motherfucker tomorrow. And so it's like,
and I'm glad that you bring that up, because people need to they need to understand something about trading, because trading and investing are two entirely different things. One has nothing to do with the other. Okay. Sure. So all of our clients are freaking hedged with their big money.
Yeah.
They've got their trading money that we're never holding positions. If you want to go into a position overnight, you're free to go into a position overnight. Just close it before the pit opens, and vice versa. Okay. What people need to understand is, like, I was on another podcast a week ago, and someone was asking me about what I thought about gold and silver, about the value of it. I said, gold's only worth $10 a tick to me. What do you mean by that? I said, it's $1,000 an ounce. What are you talking about? I said, let me ask you a question, my man. How much gold is in every Federal Reserve bank that you know? And before you answer that question, how much gold is in people's mouths, around their wrists, around their necks, in their ears, around their ankles? And how much is in the ground that has not been found? Oh, yeah, and by the way, while you're at it, how much is being stored above ground that's already been mined? You have no idea. So please don't come to me and tell me it's worth $5,000 something an ounce when you can't even make the calculation. It's only worth what you are, whether you're long or short at that moment, and if it's going in your favor.
Sure. I'll go for that.
And once people calm down and understand that this is just a game.
It is.
Ryan, I'm sure you've seen people who were called. Margin called.
Margin called? Yeah, all the time.
Debit called. I'm sure you've seen people, right?
I've seen it, yeah.
Okay. Did anybody ever deliver a herd of S&Ps to their front yard?
Definitely not.
And this is why the people in this business despise me, is because I am so dumb that I see things for what they are.
Right.
I never fell for the big words because I couldn't pronounce them. So I didn't even know what they were talking about. I was like, oh, it seems like it's going to get here, and it goes up 10 cents, it's worth $10. If it goes down, it's worth $10. Okay. That's all I need to know.
Another thing that a lot of people really goof up on, and I know that, I don't even have to ask you because I already know the answer, just because you can't be any other way and be in the business as long as you are. People miss, I feel like a lot of guys who are just starting trading, and even a lot of people who aren't, they don't have any data. Our whole business is based on probabilities and statistics, or at least mine is. I would assume yours is as well. You have to be, otherwise you wouldn't still be in business. And you have a gap-filled trade, so you clearly know the probabilities of these things getting filled. It's amazing to me how many people just click buttons and don't have any real concept of the probability of certain things happening. I find it absolutely incredible. And some of the biggest people that I've seen have the biggest problems, and you wouldn't think this would be the case, is engineers. I have ran into so many engineers who are like, they just can't figure out why it's not working. Like, what's your data say? Well, I don't know, but I've seen this happen 1,000 times. I'm like, yeah, but have you back tested this? Have you actually figured out, like, when this happens, it works 6 out of 10 times? Or whatever? Oh no, but I just know. And I'm like, this is crazy shit to me.
Well, the problem is with engineers, as brilliant and as smart as they are, they're dealing with absolutes.
Yeah.
Please tell me where in the trading business there's an absolute.
Yes, not never.
And here's why there's not an absolute. You are trading against either hundreds or thousands of separate entities who think they're right simultaneously.
Yeah.
Okay. That's why people go, AI is going to take wrong. Because we go back to the guy with the alimony payment, the guy with the freaking, child support thing. Hundreds and thousands of people trading simultaneously, and you have no idea, unless you can read all of their minds simultaneously, you're not going to have any idea what they're doing. So what do? As goofy as it sounds, brother, the trend is your friend.
Yeah, no, it's true.
Fear and greed is your friend. Wait, let it develop. And the truth of the matter is, what we tell a lot of people all the time is everybody's looking for something for free. Okay?
Crazy.
They're going on the interweb and they're looking at these goofballs on YouTube who are front running them, who they're just lying. Okay. Well, if you think it's expensive now, wait till it's free.
I like that. That's good. Yeah.
Because, for example, and we were talking about prop shops before, they hate our kind. And here's the reason why. Our people are steady, consistent, and they're trading a plan. They're consistently getting paid. They're not blowing up, so they're not having to re-up their accounts 5, 6, 7 times a month to play.
Right.
Okay. And a lot of people come into this business and they'll buy some software package with this suite of trailing indicators and technical analysis. Well, 99% of these indicators are trailing.
Yeah, they're lagging.
They're lagging indicators. I can read price in real time. Why do I need some goofy freaking colorful indicator to tell me where price has already been, where I know where it is, and I can read the market auction process in real time? Why do I need it?
Because people like to be told what to do, whether it be by a machine or somebody else. They do. They literally really do. You know that, and I know that. That's why the majority of people look for signal rooms. They don't want to take the time to learn because it's too hard. You know, they'd rather just have somebody tell them. And then, and then they can blame this person when they don't make money. Like, well, he told me to do it, so it's not my fault. He fucked me up.
Well, that's what this is. That's what this business is. And it's funny that you say that, because I require every client in my room to send a screenshot of every single trade that they take as soon as the trade is concluded, whether it's a winner or a loss. So let's say those numbers that I were giving you earlier, 77 wins, 18 losses, 10 break evens. Okay. If 8 people take one trade and it's a winner, that only counts as one win. If one person takes one loss, it counts as one loss. I've had 17 people take one winner. Guess what? It counts as one freaking win. There's nothing I can do about it. Okay. But they learn how to do it. And then they're responsible for every action they take. They're accountable. They can't hide. And you want to know how they can't hide? Because I'm the guy putting the freaking levels up the day before, so I know where the trades are. And that's it. And once you make people accountable and you make them responsible for their actions, they start getting better. Why? Because they see those 7, 8, 9 people take a trade, or those 2 or 3 people take a trade. Well, if they can do it, so can I.
How long have you been running your room, Pat? I honestly don't even know.
How long have I what?
Been running your room. Like, how long have you?
In every variation from trading advantage to this one, like 17 years.
Damn. Okay. And you're like one of the only, and listen, you got me beat on this. You're one of the only guys I know that is actually licensed.
Here's the shocking part of this. Okay.
You're actually licensed.
I'm one of the only freaking guys in this business that is licensed and can give financial advice on futures and commodities and Forex. It's like, I ask these guys, and this is, I love to use this one. They're coming at me with all these indicators and all this stuff. It's like, awesome. Are you licensed? Well, what do you mean? Series 3, 34, you want a CTA, you trade LODs, other people's. Well, no, then what the F are you doing?
Yeah.
What have you done? Who are you?
It is crazy to me that how many people skate by on that. I'm sure you've noticed. Me personally, I am very cautious about the way I word things because I am not licensed, and so I give my thoughts, but I never can tell somebody where to trade or how to trade it. I show them what I do. This is what I do.
And that's
yeah.
That's what you can do. Like, for example, I don't give people personalized financial advice. We get to a level, okay, we're in a gap fill and you're trading micros. Well, what does the method say? It's either 2 contracts with the trend and 1 contract against the trend. It's entirely up to you whether you take it or not.
Sure.
And you explain, well, you have to explain the risks to everybody, whichever doesn't seem to understand. Like, no, you can't walk away with a trade on and go get coffee. No, you can't do that. No, do not take something at news. You have no idea where it's going to go.
Sure.
Well, but the news, that means that, have you ever been on a trading floor? They're not watching the television to see the news. They're making the news. They don't care.
Yeah. I have gotten to the point where 8:30. So I put my trade plans out and they come out like right at 8:30 or before. I get up because I have ADD. I have issues, like I literally get up and leave and I come back after I meditate and and everything's all like I meditate every morning. So after the move's been, the morning kind of, digest or whatever, I come in for the bell. I get my ass away from the computer at 8:30. I don't even want to be there because I have been more times than I care to admit been tempted and been extremely wrong.
I go one step further than that. Okay. I make, again, in the screenshots, everybody has to show their profit and loss. They have to show the account that they're.
Okay.
So let's say Ryan comes in and Ryan takes a trade. And Ryan makes $300 on his first trade. You send it in. This is my exact, I do this 100 freaking times a day. Ryan, you're up $300. Here are your choices. You can risk half or you can risk it all. But if you lose or you break even, you're done for the day. And if you're done for the day, I am kicking you out of the room. So I am not responsible for you doing something stupid because you made a choice to risk half or all. If you risk half of it and you lose, at least you leave with something. If you risk all of it, you're break even. What's the worst thing that can happen? Okay. If you win, you can keep going, or you can just take your 300 and leave and come back tomorrow.
Yeah, Mike told me you do that. Actually, I was really impressed by that. That you like, if they lose, they're out, and you stop them.
I kick them out.
Yeah, that's
yeah. Kick them out of the room.
That's so wild.
What happens?
What? Come back the next day, basically. You're like,
yeah, you come back the next day.
Yeah.
You come back the next day, but I'm not going to be responsible for people because there has to be repercussions for your actions.
Fair enough.
Yeah. Okay, and I'll tell you how I learned this. I learned this by being a doorman on South Beach for 12 years in the 90s and 2000s. Okay,
nice.
It's amazing the power of that velvet rope. That there's nothing going on behind you, behind that door, behind you. There's nothing happening there. There is nothing but trouble, degenerates, and losers. Okay? People will do anything to get in. The moment you tell them they can't get in, they'll give you anything to get in. Well, once you take access away from people after they have done something, well, what's going to happen? They lose their freaking minds.
That's actually a genius move. I never really thought about that because it is true. That is the way the nightclub works. We used to do it. Well, I say we. I remember standing outside. There was a club called Rhino. Do you remember Rhino? It was right off of Ontario and whatever. I don't know. It was next to the Keller Williams, whatever. They used to do that all the time. There would be very little people in there. Benchmark was the same way. Benchmark, it would be empty inside, and they would have a line, and people would be trying to pay the doorman money to come in, and the whole 9 yards. It was crazy.
90% of trading is 100% in your head.
Well, yeah, that's true.
That's what this is. So what do you do with people? You're accountable. You're responsible for every single thing you do. Okay, I've given you your options. And those are the only options you get. You don't get any more options. Because I take away your ability to do dumb stuff. And
how many people you got in your room? How many people are in there? You have quite a few, don't you?
At any given, it all depends because I have about 10 or 12 people who only take a gap fill and gold in the morning. They'll leave immediately. Then another people so there would be 40, 50, 60 people coming and going at any given time. It's a revolving door in there because we have figured out for Ryan, it's only good to trade between now and now.
Right.
For Tiffany, it's only good to trade between now and now.
That makes sense.
Bill will only take this trade, and that is it.
I do the same thing. I trade from the open to noon. I get the hell out of there. I give too much money back in the afternoon. Yeah.
The worst thing you can do is sit there and stare at a screen when there's nothing happening.
Yeah, it's really, really bad.
It's really you can do. Again, you go over the quant stuff where and this was a report that was published by Tom Alexander years and years and years ago. And then when I went over the quant stuff, it's exactly the same freaking number 15 years later, 17 years later. In 926 trading days, consecutive trading days, and I believe it was like 2006 to 2010-ish, I forget what the years were, that you made a new high or a new low for the day from noon to 2:30 in the afternoon Eastern Standard Time, less than 7% of the time. Yet you have people sitting in there staring at a screen for hours on end thinking, this is going to be the breakout. This is going to be the...
Say that one more time, because I'm a big statistics guy. I got to look this up.
1,926 trading days. that you would make a new high
or a new low
between noon and 2:30 Eastern Standard Time. Now, market profile, so it's 30-minute increments.
Yeah.
Average, when you average all those 30-minute increments and all those days together, roughly a new high or a new low for the day, 7% of the time.
I mean, it makes sense. It's lunch hour, doldrums or whatever. It's, so there was a guy that one of my mentors, and this guy his starting position was 80 cars, and he would go into like 280 to 300 cars, and he traded very similar to what you're doing. He would trade, he called them, volume clusters. It was just a different way of looking at it, whatever. Same shit though, basically. And, he literally, one of his biggest things is understanding the time, your opportunities, understanding the time opportunity. It would be Fridays after 12. He absolutely do not trade. And it was lunchtime, definitely not. He would come maybe the last hour of the day, but it was always just the morning. And he would try to get his money and get up out of there. And he did really well. But it was always about understanding the best time to trade. And that had more to do with it, I felt like, than his strategy a lot of times.
Oh, absolutely it does.
Yeah.
It's the momentum of something that can carry a trade. So, for example, you trade the ES. That's your thing. We start in my room at 8 a.m. because we're trading the opening of gold.
Right.
Then we're looking for the opening of oil. Then we're looking for the opening of the equities. And then I tell everybody at 11:30, if you're not in a trade, get out of here. Don't come back.
I should have you. I mean, I know that you're taking care of your room, but I listen, there's a lot of guys in my room that trade everything, and I just trade one thing. And I would love for you to come in there and show some guys what you're doing. It'd be cool.
Oh, yeah, sure. Would love to. Love to.
Because I mean, I'm just out of touch with these products now. I used to look at them all, but now I've really just become a master of one. I mean, I just size up on this product. But again, that doesn't mean that's what everybody wants to do, right? So
you're so good at what you do, you don't have to. That's the entire reason of us getting together. We're offering different things with the same sort of idea.
Right.
We're giving people more opportunities because there's going to be some people that are one and out. God bless them. Then there's some people who they want to keep grinding because they understand it's a numbers game of wins and losses, and as long as your risk is kept it's kept intact, your risk is kept in check, you know that you can keep on trading with X.
Right.
The numbers are going to play out.
Yeah.
These things don't change, Ryan. It's not like there's new guys coming in with new methodologies. It's the people that are there teaching the newer guys to do something. The newer guys are taking over. And when the older guys leave, the newer guys are doing the same thing the older guys were doing. That's just the way it is.
And you're trading more volatile. I mean, again, granted, ES has been moving lately, but it's generally a slower trade, and you're trading much more volatile markets. And listen, let's just be honest with each other. People are adrenaline junkies. They like the volatile. Like that's why NQ is so popular in the prop firm community. They like the moves, and the same thing for gold and silver and all this other shit right now that you're trading and I'm not. So I think it would be a nice, bring it together.
Exactly. They're degenerate gamblers.
Yeah. To say it frankly. Yeah.
It's just the truth. The overwhelming majority of them.
Yeah.
But it just is what it is. The idea is to give them a methodology that works. Because what I say to people is, I'm going to teach you 80% of what you do. The other 20% is what you do applied to that method. Because you have to be a total moron to think that I am the best for everybody. I'm not.
Right.
But the way that I structure things and the way that I can show you where the best entries are, I feel I'm the best at in the world. Now, you could have people who, let's say, for example, they're so conservative, they will never, ever take an opening bar gap fill trade, but they will take a reversal long after a gap fill, the first chance they get. Well, I like that. Try to change it.
That's me. I like that trade, especially on the ES with a gap down on like a Thursday, Friday. I'm all about getting long on something like that. Like that makes sense.
Ryan, that trade micros that consistently make hundreds of dollars a day. Do you know what would happen to their mindset if I suggested them to just start doing minis?
More than likely they'd get wrecked because they just can't handle it.
They get destroyed.
Yeah.
So why are you going to take somebody out of their sweet spot when they're so freaking successful and try to change them? It's not my job to change them. It's my job to make them better than what they could be on their own.
Well, it's interesting you say that. So, dude, literally for 5+ years, and it took me I basically had to see a hypnotherapist to fix it. I'll just tell you, I could not really trade more than 5 cars. Any more than 3, I would get a little and it's weird because nothing to trade doesn't change. It's me, right? And any more than 5, I'm like, okay, I literally couldn't hold it. But I put 1 or 2 on. I'll sit in the trade for 7 hours, right? But put 5 on, I'm like immediately like I'm probably wrong. I don't know what I'm doing. Like, why am I doing this? Like, it's the same. It's the same fucking trade. It was crazy. So again, you're talking about
raising my hand. I've got the answer for that.
Please.
I have noticed that the lose my freaking mind number is 4 contracts. Not me personally.
Just across the board.
Across the board.
Yeah.
And here's the reason why. When people take a trade and they see more money than they make in a week flash in front of their eyes in seconds, they lose their freaking sanity.
It's true.
And they can't deal with it.
That's a good point because so I have this dollar amount in my head, or at least I did for a long time. $2,000 to 2,000 to 3,000, really call it 2,500. It like that like if I was red $2,500, like I would just fucking absolutely just lose it. I'm like, I'm done. I can't. I got to walk out of here, right? And the same thing would go on the plus. If I'm up, well, not now, but if I was up, $1,200 to $1,800, I couldn't not take the money. Like it was just my brain is like, you have to take it, and I wouldn't refuse to let it run. It took a lot of discipline to make.
Let's do another psychology examination here. Okay. So, and this is what I tell people all the time. When they come in here and they're like, I want to make $1,000 a day. Why 1,000? Why are you setting your sights so low if you're putting a number out there?
It's a good point. I like that.
A rational number out there to begin with.
Right.
There's no basis for said number except it's 1,000. Okay?
Yeah, it's a psychological number.
Right. Why are you aiming so low? Why not 10,000? Why not $100,000 a day? Well, it can't go up anymore. How do you know that?
Right.
You don't know that. So that's these are all these things where it's these numbers where people sometime in your life you made 1,800. And that was the most money you've ever made in your life, whether you were working as a bartender or something. Okay. Yeah. That number freaking sticks out because you bought something that you wanted right then and there with that 1,800. That number sticking in your head for some reason.
Yeah. It's very subconscious for sure.
It's all in your head.
Yeah.
Because, for example, the other day, and I've taken I've taken 7 or 8 oil opening bar gap fills in the last 2 weeks. Now I'm using 30 ticks maximum risk, so $300 a contract for the minis. Okay.
Okay.
I've won 7 out of 8.
It's great. 1
open, pulled me in, freaking face rippered me off, slipped on the wall, everything, murdered. But I know the gap fill works more than X amount of times.
Right.
It's going to gap fill 78% of the time, depending on what day it is.
Yeah, right. Isn't that interesting too? The day matters. I think
it's very interesting.
Yeah.
So each one of them, I made anywhere from $400 to $600. Each one, did it fill all the way back? No, not one of them did. But I got enough movement to make up for whatever loss I had times 3.
Yeah, right.
What am I going to do? The first thing I do is as soon as I get to break even, which would be 30 ticks, I just move to break even. And now I'm looking for a structure stop. So I'm looking for, let's say, a short for swing highs. And after I make a new low, I'm going to move it 5 ticks above that previous swing high. And I'm just going to stay in it. I'm going to stay in it. I'm going to stay in it because my target's freaking 0. How do I know it's not going to be 0? Because we've seen it go to 0.
You talking about oil? Yeah.
How do you know it's not going to go to 0? Anybody who tells you they do know, take the other side.
Bro, it's so funny you say that because I was actually trading oil full time when it went to negative 40. And I remember buying, and I have the screenshot, 11 cents. I bought 11 cents and I made 40 ticks on it or something. And I bought it because not only was it so close to 0, I didn't think it could happen, but I just wanted to say I bought 11 cents. But then it was literally, that was the last pop before it just shit all over itself. I'll never forget that. That was insane. I remember watching just like, I just in awe. Yeah, but you're right. Who's to say it can't? We never thought it would go negative. That's unheard of.
It was impossible. Now, keep in mind at that time, and I can tell you another story about that day too, which was not one drop of oil stopped shipping, not one ship stopped running. Nothing changed. Nothing.
It's wild.
So, just please don't tell me what it can do, where it's going to go, where it's not going to go. I used to see these. I'm watching my language because I'm trying. Okay, but I used to see these idiots who would go on TV and say, "Well, the S&P 500 is going to be at this," and I'd be on a radio show, national radio show, a couple of days later with said idiot, and I would say to this guy, "Seeing as how you said the S&P 500 was going to be here in 9 months, why don't you tell me where it's going to close tomorrow? Because that's just tomorrow."
Right.
Silence. Because they're all freaking frauds. They don't know anything.
Well, you can't predict when and where. It just doesn't make sense. Now, I mean, with my process, I can give you a pretty good idea of what a target is. Like, for instance, I would target like a leg low. I think where we've lost support, more than likely we'll go here. But there's no way that I could be like, it'll be here in 6 months. It just doesn't even make sense. It's illogical.
Well, because you're not selling your book of business, or you're not loaded up on S&Ps looking for a bunch of suckers to jump in and take you out.
Some extra liquidity. Yeah, right.
So you're creating liquidity on TVs, is what they don't tell you. And then they say something to the effect, and please, guys, believe me, I was on that side of the business for the institutional side and the retail side for years. I know how the game is played. Okay? They call you up every morning from the institutional side on the retail desk to say ABC is a conviction buy. You want to know why? Because they can't run it up anymore. They've run out of participation. So now they're telling your sucker retail clients to buy it so they can get out of it.
I've heard that actually before. I was reading a book about one of these guys that runs a fund. I can't remember what it, and he was telling me that, or he wasn't telling me, he was telling the audience who's reading the book that they have a morning call with all the other funds, and that they talk about what they're going to be buying in the high conviction trades. I was blown away by that. I didn't realize.
I can only speak for Wachovia. You get an email every morning telling you what conviction buys were. There was never a conviction sell. There were only conviction buys or news, which means hold on to it or buy more at a slightly accelerated rate. But boy, ABC right now, you got to buy this right now. It's the greatest thing ever. Wow, shocking. After that conviction buy call would go out, it's not going up.
Interesting.
That happened because the institutional participation was gone.
Right.
And I'm going to tell you guys a little dirty secret also on this side. Okay. The institutional side knows what the retail side is holding. You want to know why? All these goofy funds that they put people in for retirement. Who do you think creates those funds? The institutional side. So they know there's millions of shares of ABC being held in an investment vehicle that they can't freaking get out of.
Did you see yesterday that BlackRock's not allowing people to pull their money out?
That's something that I was going to talk to you offline about because of what we do also. You know, we're options also. Yeah. So when people tell you something to the effect like goofballs like Chase and Goldman Sachs, gold's going to 5,000, it's going to 10,000. They're trying to pump it up so they can get out on the way up. Okay?
I believe that.
It's a scam and it's a con game. When you have actual credit funds denying redemptions,
that's scary.
That's a problem.
Yeah, that's scary.
Okay, that's an issue because
They have
someone's
$12 trillion.
doing something.
It's just crazy.
They're doing it. They're
Yeah.
not letting you take money out, which means there was a run, to use layman's terms again, run on a bank.
Yeah.
Okay.
That's what they're trying to prevent, obviously.
I can tell you what happened. I was on the John Fredericks national radio show one time, and he was asking me, I don't get into politics because I think both sides are crooked. They're both scumbags. It doesn't matter. They're all scum. They're on the same side. They're not on our side. And I had said, do you want to see real power of the people? You're not going to get it by voting, because by the time people get up there, they're so corrupt or they're so blackmailed that they're going to do what their masters tell them to do. You want to see something? There's 1 million people in your audience, John. If half of these people go to every major bank that they have money in, retirement funds, investments, and pull your money out, watch how quickly they listen to you.
Yeah.
Okay? I got debanked at Chase 2 weeks later.
No way.
Yep. 2 weeks, I can prove it. You can go to my business partners and you can ask them what happened when we went to fill out new account forms at Chase Bank.
That's crazy.
Let them tell you the story. Don't believe a freaking word I'm telling you. So when you get somebody like a BlackRock who is denying redemptions, there's a bank run going on.
Dude, that was when I saw, he sent me that. He sent me it yesterday, and I saw the headline, but I didn't actually look into it. And I watched the video he sent me. I was like, damn, this is legit. Like, this is kind of scary. And the fact that they're stopping that is, I mean, I know why they're doing it, but it's just wild to me. I mean, they're the biggest, and they're like, we're done.
Okay, so if the biggest is having a problem, what are the smaller guys having problems?
That's what I'm saying. That's a real problem.
Okay.
That's a real problem.
Also, this is why people need to diversify their trading portfolios, because let me tell you guys something. Futures and commodities trading is going nowhere, because every freaking year, these big institutions, their most profitable desks are the proprietary trading desks of futures and commodities.
Yeah.
They need us. They need us to make money. We're not going anywhere. And this is why I honestly feel we have the best of both worlds going here, with your clients possibly learning the stuff that we teach them, and my people, I'm sending them to you immediately. But everybody, whether you're a client of ours or not, it's irrelevant. If you have a securities portfolio, you need to hedge them with options.
Yeah.
Because there is going to be a money grab coming. I'm not one of these freaking doom and gloom guys. Look, I understand how things work. You run it up, pull enough suckers and cut the legs out, and then drop it down. But you've eventually got to start bringing it back up again, because downtrending markets are terrible for business, because then people will start paying fines to get their IRAs, their 401ks. They'll start pulling money out. Then you're in big trouble. This is why the markets are manipulated, and you just have to understand, wait for the market to show you what it's doing, because it's always much more for business for the market to consistently go up, because you can drag in more investable assets when the market is going up.
Right. Yeah, you're actually, so that we were on a call the other day, and that hedge program that you guys have is sick. Actually, I was really in tune with that. I kind of want to check that out, because the way you can explain it if you want, but I mean, I'm sure we'll talk about it at some point. But it was basically hedging your long-term portfolio, right? And
it's absolutely hedging your long-term portfolio.
It's all automatic, I think. It was all automatic, right?
It's all automatic. It redistributes automatically at the end of every week. Okay, or however you want to set it. It's
cool.
plug and play, fire and forget. That's all it is, and it's specific to your portfolio.
Yeah, that was the coolest part. I was blown away by that technology, actually. When he was explaining it to me, I was like, wow, because it's not just a blanket. It's actually set up for your portfolio. Does it hedge the whole thing, or is it partial hedge? Like, if you're completely hedged, you can't make any money.
Of course, if you're hedging with options, no matter what happens, you're always going to be paying a premium to buy a call or a put, okay? So you're going to have some exposure, but your exposure is only your premium. It's not your downside. Because let's say you buy a put on your ABC 10,000 shares of stock. Yeah. Okay. And let's say, and we're just going to use a number, okay, that each option covering that position costs you $400, okay,
Right.
and you got 10. So you're $4,000 in premium, right? Well, what happens when that thing drops $300-400 or $100 a share, or $10 a share over 10,000 shares? You're now participating in the downward move because you got that put on.
Right.
So you're not losing your shirt. You're not going belly up bankrupt.
Right. Yeah, for sure.
It's not working that way. And also, here's another little dirty secret that I want to tell you guys from the Series 7 stock trading side, okay? No broker, Airfinger's quote now financial advisor, because you can't call them stockbrokers anymore because that name is so toxic. They've never even heard of a stop. They don't even know what a trailing stop is.
That's long-term investors don't use stops.
No. You want to know why? Because if a position is closed, you are going to have more of a tendency to withdraw your money. Does that make sense?
Yeah, for sure.
So let's say that I'm your stockbroker and I'm just some unscrupulous piece of trash. And there are some good ones out there. I know of two. Okay. But let's just say you're one of the other 98. Okay. What they're going to tell you is Ryan, this market's going straight up. It doesn't matter that 140,000 jobs came in short last week. It doesn't matter where this market's going straight. Okay. So buy high, sell high. So you bought ABC at $100 a share. Now it drops to 75. Your guy's going to call it, Ryan, let me tell you something. It was a bargain at 100. It's even better at 75.
Yeah, that's my favorite. If you loved it at 50, you're going to love it at 25.
Exactly. Yeah. That's the way of keeping you in the market, dollar cost averaging, because losers average losers. Okay. Right. That's essentially what it is. And let me tell you what they tell you about people like us. Futures, commodity, so dangerous. You want to know why it's so dangerous? Because they're not licensed to make a commission off any of your trades. It's dangerous for them. They can't make a penny because they're not licensed to do it. They're not allowed to be licensed to do it. You can take a fraction of the money that you have in a portfolio, trade futures, and do better with the correct education, the correct teaching than you've been sitting in positions for years.
Dude, I flipped the same $50,000 for 5 years and made it. This was back when I was like, and I made 250 grand off of that same 50 grand, like so many years in a row. It fed me like off of 50 G's.
It did more than Fiji, brother. That's that's freaking good.
I mean, I could never make that kind of money with stock ever. Like maybe options, but it's hard. Right, like futures are just so.
You wouldn't even make it in options because common sense dictates you're going to make the same kind of trade in an option that you will in a stock.
Right.
It wouldn't matter one way or the other. The difference is the leverage that we have in futures. Not to mention the fact, look at the draconian rules that there are trading stocks. You could have a $10,000 account and trade micros and keep trading the same 10,000 every day, all day, when. Yeah. We were talking the other day about when you were saying something to the effect of being a pattern day trader. You got to have $25,000 in your account. No, you got to have 25 grand in your account liquid every day just to take another trade, because that doesn't include the positions that you're in.
And what if you lose?
Trade day plus 2, brother.
Yeah. What if you literally have 25,000 and you lose $100 on a trade? You go right back into the pattern day trading.
That's it.
It's crazy.
It's crazy. Insanity. And this goes back to what stockbrokers tell people. Futures and commodities are so dangerous. We trade with stops. We know what our freaking risk is before we get into a trade. They can't tell you that in stocks.
I think the reason that whole thing happened, that whole conversation happened, is because they say technically you can lose more than what you have in your account if you trade futures, but no broker will ever allow that to happen. Like for instance, like I'm at Iron Beam, like I can't lose more than 50% of my position on one trade, and when I get to 20% of fucking whatever my balance is, they cut you off. You're done, and then your sizing goes down. Everything, like they're not doing that. Like
then they're on the hook for the money. They're not doing that.
They're not going for that. Yeah.
No. It essentially goes back to what I was saying before. You know the safeguards that are in place for trading futures.
Of course, yes.
The only thing that could possibly happen is some crazy lock limit up or lock limit down happens out of nowhere, and nobody can see that.
Right.
Okay, that's going down, which reminds me of something else. But they generally say this is because they're not licensed to make a commission off of it.
Yeah.
That's why they're always putting you in their bank-sponsored products, because that's where they make the biggest rip. It's in-house. You know, you could have a Goldman Sachs product, and you could have a Wachovia product, and you could have the Goldman Sachs product that made 5% more than the Wachovia product, but you made 3% more of a rip on it. They're selling you the Wachovia product. And that's just the way life is. People don't want to hear that. I really don't care. I'm telling you the truth of what happens. You know, and then going back to what we were saying about how there's so many circuit breakers in place, especially for futures.
Yeah.
Guys, please don't buy the BS story about some fat-fingered broker trader who sold 1 billion shares of J&J and the market crashed. There are so many levels of compliance to sell X amount of shares at a time. It's got to go through like four separate offices of compliance.
It doesn't even hit the open market, first off. It's like ridiculous.
The lies that are told are repugnant.
Yeah.
To cover what they're doing.
When these guys sell big money, they use a Bloomberg terminal, and it gets piped through all these different channels, and it never hits the open market. It's just such a big farce. It's a big farce.
You want to know what happens? Let me tell you what happens. Like what happened to a bunch of my clients when the margin was raised on gold and micro gold, but they hadn't had a chance to come out with the email telling people, trade canceled, can't take that trade. Not enough margin, not enough money in your account. They're going, what the hell's going on here? What are you talking about? That's exactly what happens on those. There's so many levels of compliance that'll bounce it back at you. There's no way it can get activated.
Yeah, I agree. It's all bullshit. There's so much bullshit.
Which 99% of it is in this business.
Yeah, for sure.
You know, this is why you got guys like you and I, we're calling it out at least 24 hours before.
Dude, that's to me, that is like such proof in the pudding right there. Like, the way that you and I approach the market is from a professional, structured standpoint. And I do not know, and I'm not saying this to toot our own horns, dude, but like seriously though, like not too many people actually can call areas way ahead of time like that can apply some sort of structure. And it's like, people are very reactionary, right? Like a lot of traders, they wait for something to happen and then, okay, we get long on this breakout, or we wait for the news, we play this and that, or we call it way out in advance. And it's just such a different level than I think what I've seen go across a lot of other channels, and that's why I think, we don't do signals because we don't have to, right? We set up trade setups, and that's just how it works. You know what I mean? And I don't know. I guess what I'm trying to get at is both of our methods, and I think that's one reason why we've kind of started to work together, is because it's such a different professional way of doing things than what you see in the marketplace for the most part, in my opinion.
It's also defined risk management as well.
Yeah, for sure. Absolutely.
Let's just go past the calling it out the day before and putting our reputations on the line every single freaking day. Let's just get past that for a second. But we're applying risk management to it.
Yeah.
Nobody's doing that.
No. We know immediately going into it what we're going to risk and what we could potentially make the day in advance or the morning in advance, whatever it is. Like it's huge.
And it's just something that I think people take for granted, I think, because they're successful in some other field of endeavor and they think they're just going to walk right into this world and be successful when they honestly have no idea what it's about at all.
You know what's crazy is I see more doctors and lawyers, people with big time jobs who are super successful. They come into the market and they get their ass humbled because they just assume that, they're going to just, rock it in here too. And a lot of times it's the guy that has no preconceived notions and he's not the smartest kid on the block. He just comes in and rapes the system, and it's so interesting to me how that works.
The greatest traders I've ever had are people who had no trading experience and came to me from zero.
Yeah, for sure.
And I'll tell you something else that's funny when you say the doctors and lawyers thing. I've had 2 Goldman Sachs executive vice presidents over the years as my clients. They
Really?
both came to me because they could not trade without the Goldman money. Because it's a style. That's the way they can always lean on anybody.
Interesting.
You know, they could lean on anybody but Tom Baldwin. Okay, let's put it that way. But they could lean on anybody else. But
right.
now they can't lean on somebody. So
because they're just those fish in the pond now.
Exactly. That's what they are.
Yeah.
And then I told them, you got plenty of money. You got $1 million in your account. That doesn't mean anything.
Nothing. You can lose it. Yeah.
Means nothing at all. So do you want to learn how to do this? Yeah. Okay, fine.
Yeah. So the real question is, did these guys come out okay, or did they?
They did. They both came out great.
That's cool. Okay.
They both came out great.
That's what's up. Yeah, I've seen some really interesting people come through, and a lot of people they have a hard time accepting the fact that they just can't. You know, it's like, for instance, I'll just give you an example. I had a doctor come through. He was an anesthesiologist, and he was top of his class or top of his field. He retired, and he understood the system, but the problem was he kept wanting to do it his way. He kept saying, "Oh no, like I'm pretty sure this is whatever." And listen, I give a blueprint, right? Like the process works. All you gotta do is stick to it. Like you don't need to reinvent the wheel. Like this is it. I've already taken all the losses for you. Follow the blueprint. Well, most people who are smarter than me want to, they want to do it their way, right? And it didn't turn out too well for him. I'll just be honest with you. I mean, maybe he's doing better now. But he just could not, he would fight with me and argue with me about my own process. And finally I was like, all right, listen, man, like, I don't know what to tell you, but, because he knew better, he was smarter than me or whatever. And so I just thought it was interesting.
I can give you a similar experience that I had because, and truth be told, for everybody who's watching this, I've told Ryan before, I am older than you. I have screwed up more than you have. He resists. He refuses to believe this. But I told him, trust me, I have screwed up more than you, bigger than you, on grander scales that you have not seen yet. But don't worry, you have time.
It's hard to believe.
You have time. But please learn from my mistakes. I had that, and what I had learned is dealing with people in the beginning, where I would run into somebody like you. The anesthesiologist that would do things. Strangely enough, I had an anesthesiologist, several of them. Yeah. And what I would told them is, so how about this? How about you take me into your office one day and let me put my freaking handles on those gas valves and let me decide how much that patient needs.
Actually, that's good. Yeah.
And then what are you talking about? Yeah. Now you're coming into my world trying to tell me how to do it.
Yeah, it's true.
Don't. If you knew what you were doing and you were so scary good at what you were doing, you wouldn't be here.
That's true.
And that's just the way that it was. It used to go back to the whole thing when I was a professional fighter and I was working at the clubs in South Beach, and I could tell you how many guys threatened my life. They're all going to kill me. This guy's going to beat my blah 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 blah. All this stuff over and over and over again, with them not knowing that I trained 4 hours a day, twice a day, beating the crap out of people on a professional level. Okay, opening their mouths, not having any idea because they thought I was something that I wasn't. Now, there's absolutely a chance that they can hurt me.
Of course. Absolutely
there is. But the chances of them walking out of there not crippled are zero. Because that's what I do every day. Right. I break bones for a freaking living every day. Joints, snap them in half, tear them in pieces, rip people's arms off and beat them over the head with it. Please don't come into my world and tell me what you're going to do to me.
How long did you fight for?
14 years.
It's pretty good. And you got your ears in one piece. That's pretty
good. They're pretty screwed up, but I just didn't let anybody get near my head very often because I've wrestled since I was 6 years old, and you learn very, very quickly the moment somebody gets head control on you, you're screwed. So don't let them near your head.
Yeah, that's like to me, that's the biggest drawback about the fighting thing is the cauliflower ear. So
you don't even notice it, dude. It's just something. It's the cost of doing business, brother.
Does it go away? Does it eventually go away?
No.
No, it's forever?
Yeah, it's forever. But And you can always get in there and get it cleaned out of it, but nobody cares. I mean, it's just.
I was just curious. I didn't know.
It's just the cost of doing business, I mean, I knew that I was not going to be a model going into the fight business.
Right.
You expect to take damage, because if you don't, you should not be in this business, and you better love to take it, or you really better not be in that business.
Sounds like trading.
It is trading. There's no difference except for the physical violence. It's just pain.
No, it's mental pain and violence. It's some of the worst, for sure.
It's just as bad as any physical pain I've ever endured.
Dude, I've been through some traumatic moments, for sure. Well, I appreciate you taking the time to meet with me, and I definitely want to bring you into the room and introduce you to my guys. And I look forward to doing this with you. I really, really, truly believe, especially after this conversation, because this is really the longest that you and I have ever talked. We talked about things. I truly believe that you have a system that works that is a complement to what I do, and even it can be complementary or even standalone. Obviously, you're doing a standalone, and I want to know more about it. I mean, I'm always, like I said, a lot of the best things I've learned, I've taken from other people and made it my own. Like I had a handful of mentors. I took the best pieces of everybody, and I used to want to talk to you back in the day, and now I am. So now I'm going to steal some shit from you. So I'm looking forward to seeing what you got. So
now you're like, hey, it's just a typical a-hole. Variety a-hole. That's all.
Right? So that's what's up. Well, yeah, let's do it next week. Let's try to do it this week. I'm going to post some of your wins videos in the room. I'll start putting them up every day just so people can kind of see what you're doing. And we'll get this video out to everybody, and let's try to make something happen. I love to see one of the things that and I'll end with this. I had such a hard time in this business. I had some really emotional times, and it's very hard, especially in the institution side. One of the greatest pleasures that I find in this business is watching other people succeed in my room. I love watching my guys win. I think I get more out of watching other people win than I actually do myself, because it's definitely an ego trip. I'm going to tell you right now, like I stroke my own ego, but watching these guys win from my process, my plans, whatever it is, I love that shit. And so, if we can help people kind of get past that learning curve, it brings me more joy, I think, than actually making money, which is kind of weird, but maybe it goes hand in hand. I don't know. So
I agree with you 100%. And I'll leave you with this. I know I can just be a windbag and tell stories all day, just because I'm so old and I failed so many times. Stories. The guy that brought me into the business, I had met him because he came into the fight gym and he wanted me to train him how to fight. So that's another story for another day, but we became inseparable after a couple of months. Okay. And the guy said to me something to the effect one day of, if you can't help someone who wants to help, not who needs it, there's a tremendous difference between the two. If you don't help someone who wants to help and you can actually help them, then what good are you?
It's true.
You're worthless. Because you're doing nothing to help somebody else who actually wants to help themselves and better themselves.
Yeah.
And it pays itself back. It comes back a million times. And I can't tell you, I feel the exact same way that you do. I could not be more proud of the people that I coach, the clients that we have, and I want them to win. I want everybody to be successful, because when everybody's successful, there's no grief and there's no.
No, it's great. I love watching our guys win. I think it's awesome. So hopefully, we can spread the love between our people and, take success a little bit farther. And I appreciate you meeting me. Let's do it again. I think this was fun. So,
brother, I'm ready. I'm there anytime, any place, anytime you want to do it. It's just me, Delilah, and Corvus over here. So I got time to do it anytime.
Fair enough. All right, brother. Thank you so much. We'll talk soon.
You're welcome. Thank you very much, man. See ya.
Cheers.